Hello and welcome everyone, and thank you so much for joining us for today's webinar on the impact of Brexit on the NI tourism and hospitality industry. For anyone who doesn't know me by now, I'm Patricia Kingston from Tourism NI, and it's lovely to have you with us today. This session follows on from the Preparing for Brexit webinar, which we delivered back in December, and today we'll be joined once again by Feargal McCormack, Managing Director at PKF-FPM, and his Brexit Centre of Excellence team. So we're certainly in safe hands this morning. We're delighted once again to be offering a limited number of short one-to-one calls with our experts for any NI-based tourism and hospitality industry who are registered to attend this session, and I'll be explaining a little bit more about that later on. As you know, this webinar is being delivered as part of Tourism NI's ongoing Tourism Enterprise Development Programme, and this year's programme has been designed to help the tourism industry here survive and recover as we start to move forward from the events of the past year. We're continually reviewing and evolving the programme based on industry needs, so please keep letting us know what other topics you'd like to see in future. As always, you'll be receiving a link to an evaluation form following this session, so please be sure to complete that and we can continue to tailor our programme of events to your needs. Alongside the TED webinars, you can also access a whole range of support materials on tourismni.com and covid19.tourismni.com. And again, I'll talk a little bit more about that later on. I'll be asking all of our speakers some of your questions at the end, so be sure to pop these into the question box in your control panel during the presentation, and I'll pick up as many of these as I can with Feargal and the team following the presentation. So now, without further ado, it's my great pleasure to introduce Feargal McCormack to kick off the main presentations for today. Good morning, Feargal.
Thank you very much, Patricia, and good morning to everyone. As Patricia said, my name is Feargal McCormack, and I'm the Managing Director of PKF-FPM Accountants. And I'm joined today by two of my colleagues from our Brexit Centre of Excellence, Amy McShane and Colin Flanagan. Both, may I say, quite humble, but I should tell you that they're part of a unique group who have just recently qualified with the Certificate of Customs and Trade from Chartered Accountants Ireland. And they're particularly well qualified to talk to us on the subject of Brexit, customs and VAT. In terms of today itself, obviously the presentation, the webinar is preparing for Brexit, and it is being delivered as part of Tourism Northern Ireland's new Tourism Enterprise Development, or TED programme as it's referred to. And as in previous webinars, we will provide the slides as an aid memoir, and as a result, we may not necessarily talk to each slide, but hopefully in your own time, you will find the slides of benefit to you in understanding the subject matters covered. The webinar itself is designed to help businesses operating within the Northern Ireland tourism industry to adopt post-Brexit and the protocol in Ireland and Northern Ireland to the withdrawal agreement, and also the free trade agreement between the UK and the EU, all taking effect simultaneously from the 1st of January 2021. It's fair to acknowledge that single markets exist to simplify trading arrangements between countries. And when one country leaves a single market, as Great Britain has done from the EU following a referendum, it follows that trading arrangements become more complicated. Given the special arrangements for Northern Ireland via the Northern Ireland Protocol, obviously issues are further complicated, as we all know at present if we're watching our news screens each evening. Now, this webinar is a follow-up to earlier Preparing for Brexit webinar, which we hosted in association with Tourism NI on the 15th of December 2020. And it aims to explore what the new trading environment post the introduction of Brexit means for the tourism and hospitality industry here in Northern Ireland. At the outset, it's acknowledged that one-to-one mentoring may be available to enhance knowledge and understanding of specific elements of today's webinar, and I know Patricia will come back to that later on. For over 4 years now, following the UK referendum vote in June 2016, which, as I'm sure you all know, favoured the UK leaving the EU on a vote of 52%, and the subsequent decision of the UK government to notify the European Union of the UK's intention to withdraw from the European Union on the 29th of March 2017, beginning the Brexit process, we at PKF-FPM have been involved in ongoing risk assessment and planning for a range of different Brexit scenarios, and also, to be fair, helping to endeavour to help our clients prepare for Brexit, and now, in the current position, adapt to the changing circumstances arising from Brexit, effective from the 1st of January 2021, albeit that just over 6 weeks have passed since the 1st of January. Our preparations were before and after the Northern Ireland Protocol, which originated, again, it's important to understand the context of today's webinar, which originated as part of the draft Brexit withdrawal agreement, which was initially signed in December 2017 and was subsequently finalised in terms of implementation on the 9th of December 2020 and is subsequently indeed reflected in the Northern Ireland Command Paper issued by the British government on the 10th of December 2020. So nothing easy, but that's hopefully the context of today's presentation. Now, the protocol on Ireland or Northern Ireland to the withdrawal agreement, it establishes a trading relationship between Northern Ireland and Britain, such that a hard border is not required on the island of Ireland to comply with the post-Brexit trading relationship agreed between Britain and the European Union. But what does that mean? Well, its consequence is that Northern Ireland will retain tariff-free access and respective goods to the EU, while the rest of the UK will not. Now, post the introduction of Brexit and the Northern Ireland Protocol, there have been certainly supply chain practical consequences, and some would say some major challenges, an increase in transport costs, and post-Brexit administration holdups. Currently, and I think you couldn't be living in Northern Ireland and not be aware of this, there are ongoing political discussions and debate, along with business representations addressed to the EU Vice President, Marcus Sepertis, and UK Cabinet Minister, Michael Gove. I apologise to you, to the EU Vice President, but I can assure you, if I stayed here all night, I still couldn't pronounce his name correctly, so I apologise. It's noted that the Northern Ireland Protocol, and this is an important point to appreciate, has a potential expiry date at the end of 2024, when the Stormont Assembly can decide whether or not it is to continue operating within the rules of the Stormont Assembly. For service businesses, there are also a range of issues, but they're not covered in the Northern Ireland Protocol document. And they are namely mutual recognition, travel and mobility of people, and data adequacy. Indeed, data is an important point. So if we stand back for a second and we think about this morning in terms of the economic context of where we are at present. And it's fair to say that nobody more than the tourist sector knows that COVID-19 in particular and Brexit have caused the structure of the Northern Ireland and global economies to change rapidly. And COVID-19 and Brexit are expected to continue to impact as the economy evolves, albeit thankfully at a less rapid pace, as hopefully COVID vaccines become more prevalent than over the previous 12 months. Changes in consumer and employee behaviours to online and at home, acceleration of digitalisation, remote working, and our loss of attachment to the physical office workplace is just amazing what's happened in 12 months if you think about it. Requirement to meet the 2050 net zero carbon targets, and a focus on our well-being, albeit I would need to focus an awful lot more on it, will mean that a very different normal will prevail as we come out of COVID-19 and start to adapt to Brexit. As the economy opens up, post-COVID-19, vaccinations and improvements in the risks to community health, and the expectation is that some lost ground will be recovered through a consumer-led recovery. People will have been building up money, those who are fortunate to have it, and they'll be very keen to spend it once hopefully a little bit of normality comes back. With staycations being the norm for the tourism and hospitality sector in 2021. At present, the consensus of a broad range of economists for 2021 suggests that a rebound for the entire economy relative to 2020 of possibly +4% to +6%. And that's the entire economy, and that's on an annual basis. Obviously, once hopefully we start again after lockdown, it'll be very dramatic, but that's spread out over a year. And that's consistently with what is expected in advanced economies. And obviously, people will be watching carefully Israel over the next couple of weeks. Obviously, Prime Minister Boris Johnson is also about to further develop his plans for England in particular. We see how they evolve over the next week or two. However, despite the continuing uncertainty, it is encouraging that there are positive reportings of strong bookings for some summer staycations this year in some tourism businesses. From 2022 onwards, it may take up to 5 years, unfortunately, to get fully back to pre-pandemic economic levels, assuming roughly approximately 15% growth per annum. Now, it is hoped, believe it or not, that the tourism and hospitality sector in particular may come back a lot quicker. So, what do we hope to achieve from today's webinar? Well, we hope that by the end of the webinar, you will have a greater understanding of the context of Brexit and the NIProtocol, of customs tariffs and supply chain and the trade and cooperation agreement when preferential tariffs actually don't apply. Options to mitigate tariffs, that is the trader scheme or the waiver. Obviously, filing customs declaration, Brexit labour implications at a high level, VAT implications of the NIProtocol, and then the impact of of Brexit on the UK tour operators margin scheme, and also the retail export scheme, and the electronic VAT refund scheme. Obviously, the impact of Brexit also on the VAT place of supply rules. We're using VAT terminology here, but to put it simply, that means the rules that will apply mainly to e-commerce. Very important, as e-commerce continues to be a growing and more significant part of the economy. And a brief overview then of excise duties post-Brexit. Now, it's fair to say that at a very high level, if you stand back, really all of us need to do this now and again in our business, but if you stand back, there are 8 key potential Brexit areas or risks which may affect your business. Now, the truth is, it is very unlikely that all 8 would affect every business. So you have to basically have a look at your own business and see, do these areas or risks actually impact your business? But in very simple terms, supply chain, which certainly we'll be talking about later on in the seminar, the whole area of sourcing, logistics, stock management, locations, market access, and storage. In terms of people, and again, I said we talk about this at a high level, you have the issues of mobility of staff, you have the issues of availability, you have the issues of being able hopefully to retain staff, and finally then you have the whole area of workforce strategy and various tax elements. In terms of economics, obviously, you have the macro trends, and we try to cover some of those already this morning. You have the demand and sentiment, forecasting and scenario planning. Remember in the earlier webinars, we talked about the importance of scenario planning. If this happened, what would be the consequences, etc. IT systems, very important that your IT systems are basically process ready for Brexit. If they're not, really you need to get them adapted to make sure they are, and obviously to be able to deal with new customs data and any new IT systems that need to be upgraded. In terms of legal and regulatory, and this is an important area again for some business, for others it's not, in terms of your agreements with customers, your legal agreements with customers or suppliers or distributors, obviously license or permits, intellectual property, or indeed legal entities. And we're seeing a fair bit of information intricacies in terms of legal entities, particularly UK, difference now again in UK, Northern Ireland, and the Republic of Ireland in some cases. Treasuries, we look at funding and tax issues and currency. Strategy, yeah, as you know, many of you will, as part of your Brexit scenario planning, consider perhaps restructuring or relocation of part of your business, or perhaps opening up a new element or a new division or a new company in EU or UK mainland indeed. Acquisition and divestment opportunities would also be looked at. And finally, trade, and this is where the NIProtocol obviously comes in, the tariffs, the routing, the customs, regularly VAT and service. And the fair point is, it's fair to say that in today's webinar, we will be focusing mainly in that space. So just to go back to the NIProtocol again, because it's so much in the news, and I think it's fair to say it's important to present factual information and let people draw their own conclusions. Factual, obviously, from an economic and business perspective. And my colleagues, Amy McShane and Colin Flanagan, they will go into the detailed practical implications of Brexit and the NIProtocol. But I would just like to, for a few minutes, again, highlight a few issues at a high level. It's fair to say that as a result of the NIProtocol, no EU member state will be able to apply any tariff or related barriers to goods from Northern Ireland. Thus, this does not just apply to movement of goods from Northern Ireland to the Republic of Ireland, it also applies to the movement of goods from Northern Ireland to any other EU member state. Now, missing from some of the discussions of the Northern Ireland Protocol in the papers is a recognition that the protocol does designate Northern Ireland as a uniquely privileged trading zone. Northern Ireland is now a member of both, the only jurisdiction is a member of both the EU customs area and the British customs area. And because the Trade and Cooperation Agreement largely eliminates tariffs between Britain and the EU at present, this advantage is not as pronounced as it might be just at present. However, an EU supplier can sell high tariff goods, typically food and manufactured products, into Northern Ireland without any consequences, any customs consequences. The benefit of this is not always at present, since Britain is currently, to be honest, only applying what might be said, as I've described, as a light touch customs controls on many types of goods entering Britain from the European Union. However, this is expected to change, perhaps in July next year. And once these changes are implemented, Northern Ireland's privileged status as an export destination for EU produce and goods will become much more apparent. However, the flip side of the protocol is that goods, particularly food, arriving in Northern Ireland from the rest of the UK will be subject to a range of controls and checks, although there are currently temporary grace periods, and you hear there's a significant levy on at present to try and extend those periods. And it's also important to appreciate that there are little or no controls on goods moving from Northern Ireland to mainland Britain, and that Northern Ireland businesses have unfettered access to the wider UK market. Now, there are two factors which make Northern Ireland an unrivaled location for European Union businesses wishing to trade with Britain. It is clear that Britain's suitability as a distribution hub for EU goods is actually fast declining post-Brexit. However, the opposite is the case for Northern Ireland. VAT is the other great handicap to cross-border trade in goods. And when VAT is taken into account, the position of Northern Ireland is further enhanced. So these are two very significant potential advantages of the Northern Ireland Protocol from a business perspective. So as a result of the Northern Ireland Protocol, Northern Ireland has a hybrid trading status. It remains part of the UK VAT territory for goods, yet compliant with British rates and rules. What does that mean? Well, for example, a French exporter can supply goods to a customer in Belfast on the same terms as a customer in Milan, but not on the same terms to a customer in Manchester. Thus, there is now a window of opportunity for European Union enterprises to locate distribution and processing activities to Northern Ireland. And again, you'll see that Invest and I are promoting this, and to avail of the best elements of the Northern Ireland Protocol. Now, none of the above undermines initial concerns raised by the protocol, or with regard to the protocol, which hopefully can be addressed, it's hoped, by the joint GB and Great Britain and European Union Committee under the leadership of Great Britain Ministers Michael Gove, and you may have heard in the news, Sir David Frost is going to take specific responsibility for this, I think from the 1st of March. And the EU Commissioner, Vice President, Markus Sefcovic. Now, it is acknowledged that the protocol has thrown up some anomalies. For example, like the VAT treatment of second-hand goods in Northern Ireland. But thankfully, most goods in the Northern Ireland tourism and hospitality sector are not second-hand. Other practical issues in respect of Brexit, to be honest, are currency fluctuations. And they were there already between the euro and sterling, but they may be further enhanced. And obviously, foreign exchange management and currency management issues are important. Another important point is that VAT rates are actually applicable to the tourism sector. And there is a strong argument to lobby for an option to keep VAT rates low in tourism and hospitality sector in the foreseeable future to stimulate economic activity, given that Brexit and COVID-19 have had a particularly hard effect on the tourism and hospitality sector. Another downside of the protocol is that duty-free sales will not be available either for Great Britain or Republic of Ireland visitors to Northern Ireland. And finally, we touched on some of these already, but we'll highlight one or two of those minor points before passing over to Eamon. Supply chains, shopping, and Irish companies with no EU resident directors are other create other practical issues as a result of Brexit. In terms of shopping, there is scope, believe it or not, for the exploration of the impact of Brexit on shopping across the Irish Sea. And why is this? Well, that's because the limits on personal shopping will apply between Great Britain and Ireland, €430 and £390 by air or sea. There are no limits, thankfully, between Northern Ireland and the Republic of Ireland in terms of limits on personal shopping. So there could be scope for Northern Ireland to become a convenient place for high-value shopping, although the precise modality of that would need to be worked out in due course. And the final point I want to raise is really Irish companies who have no EU resident directors. From the 1st of January 2021, for Irish companies who, this is not vice versa, this is not the case for Northern Ireland companies that are owned by Irish residents or indeed by other EU residents. But from the 1st of January 2021, for Irish companies who do not have a resident EU director, there are now two options if they wish to continue trading. The first option is that they have to purchase a non-resident bond to the value of €25,000, valid for 2 years. Or option two, they have to establish a real and continuous link with the revenue commissioners in Ireland, similar to HMRC in the UK. And basically, they have to do that. You have to get a letter from the revenue commissioners. In order for the revenue commissioners to be satisfied that you establish a continuous link and issue what's called a link certificate, the intention to create a business in Ireland alone would not be enough to get this. So therefore, revenue will want confirmation that one or more of the following conditions are satisfied re your Irish-based company. That the affairs of the company are managed by one or more persons from a place of business established in the state and the Republic of Ireland, and that a person or those persons is or authorised by the company to act on its behalf. The company carries out a trade in the Republic of Ireland. The company is a subsidiary or a holding company of a company or another body corporate that satisfies either or both of the previous two specified conditions. And then once you get that link certificate, you have to go one stage further. And the second step is once you have the positive opinion, you basically have to then complete what's called a B67 form and submit that to the company's registration office, confirming the existence of the continuous link. Now, without further ado, I'd now like to pass you over to my colleague, Eamon McShane, to talk about Brexit and customs, etc.
Thank you very much, Feargal. Good morning, everyone. So I'm Eamon McShane, and I'm part of the Brexit team here at PKF-FPM. Over the last number of years, we've been assisting businesses across the island with their preparations for Brexit. And during this time, we've developed significant working relationships with key advisors to include the former head of customs and revenue in Ireland, who since retirement has dedicated his time to advising on all things Brexit. And like we are delighted that we have such a valuable resource within our team, given the complexities. So in terms of what has happened since our previous Brexit webinar, if you can cast yourself back to early December, businesses were gearing up for a no-deal Brexit. The news that the Northern Ireland Protocol would stand regardless of a deal or no deal provided some certainty, so things were certainly busy helping businesses understand what this all meant. I know the protocol has featured heavily in the media in recent weeks, but just as a quick overview to outline what the protocol means for the tourism and hospitality businesses in Northern Ireland, I thought it would be useful to recap on the implications for the various trade flows. So as Feargal has outlined, the Northern Ireland Protocol was designed to avoid a hard border with Ireland, whilst ensuring that the UK, including Northern Ireland, left the EU as a whole. So let's get started with the easier trade flows first. And remember, these scenarios all relate to trade and goods. So, trade and goods across the island of Ireland, together with trade and goods between Northern Ireland and other EU member states, can continue unaffected. So there's no change at the border, there's no new paperwork, and no tariffs or regulatory checks. In terms then of trade and goods between Northern Ireland and the rest of the world, this too will continue as it did prior to Brexit, and that is there continues to be a requirement for customs declarations to be completed. I would just like to point out that if any of the Northern Ireland tourism and hospitality businesses on the webinar today who purchase from rest of the world have seen a hike in prices, it may well be due to the fact that Northern Ireland currently cannot avail of EU free trade agreements with rest of world countries. And so if the UK have not agreed a free trade agreement with the country you're trading with, tariffs are likely to be higher and hence make the goods more expensive. Now, I know business leaders in Northern Ireland are actually lobbying for business here to be able to avail of both EU free trade agreements and UK free trade agreements, but we await further developments on this. So putting things into context then, take for instance as part of an experience you provide in Northern Ireland, you purchase goods from the USA. To date, the UK don't have a free trade agreement with the USA. I know it's in negotiation. On the assumption the commodity code attached to the good attracts a tariff, unless your supplier doesn't pass these costs on, which is unlikely, you're likely to witness your price to increase pre what you would have paid before the 1st of January 2021. You know, so in December 2020, you would have benefited from the preferential rates the EU has with the USA, but now you can't benefit from those. Okay, so moving on to the movement of goods then from Northern Ireland to Great Britain. So the UK government has committed to guaranteeing in legislation unfettered access for Northern Ireland businesses to the rest of the UK internal market, ensuring that trade from Northern Ireland to Great Britain continues as it did prior to the 1st of January 2021. So what this means is that there's no need for export declarations and there will be no tariffs, new regulatory checks or customs checks or additional approvals for qualifying goods to be placed on the UK market. You will note here that I did say qualifying goods. So in terms of qualifying goods at the minute, goods will be qualifying Northern Ireland goods if they are in free circulation in Northern Ireland. So you can see how broad this definition is. And it just means that as long as the goods are not under a customs declaration before you move them from Northern Ireland to Great Britain, then there should be no issue with the movement. And this really forms part of like a phased approach, which is designed to avoid disruption and keep goods moving. It is expected, however, that this definition will be tightened during the course of 2021. We believe, like come June or July time, that this definition will be tightened and it will result in unfettered access being limited to products that actually originate in Northern Ireland or are substantially processed in Northern Ireland, whereby the origin can be deemed to be Northern Ireland. For products which are not substantially transformed in Northern Ireland, take for example, you purchase goods in the EU and you don't process them sufficiently to alter the origin, then you will not be entitled to unfettered access to the GB market in the same way that Northern Ireland, origin products would be. If goods remain of EU origin when selling to GB customers, you'll have to treat the sale then as an export to GB. Under the Trade and Cooperation Agreement, which I'll touch on later, EU origin products could be moved to Great Britain tariff-free. However, additional customs declarations will apply, and we'll just have to we just await further detail on how to deal with this from Northern Ireland to Great Britain. So moving to the more complex side of Brexit, I suppose then in respect of the movement of goods from GB to Northern Ireland. The protocol means that UK authorities apply EU customs rules to goods entering Northern Ireland. So the movement of goods from Great Britain to Northern Ireland is now treated as an import into the EU. And for that reason, full electronic import declarations plus checks and controls in some instances, like take for example goods of animal and plant origin, will be required. And goods that then are cleared through this import process are in free circulation in the EU. That means it can be sold, processed or moved anywhere in the EU without further formality. So once they're cleared in Northern Ireland. In terms of the checks and controls, I know these have caused significant issues over the last number of weeks, whereby goods of animal and plant origin require health certificates and sanitary and phytosanitary checks, or maybe you're more familiar with the term SPS checks. The UK government have introduced, some support here in terms of like a movement assistance scheme, which removes the need to pay like certification costs. It's hoped this will, mitigate price hikes. And then flexibility has also been introduced in terms of easements for 3 months in relation to the SPS rules. Now, I know that these SPS easements are really only in relation to authorised traders as identified by DERA. So I know it still may affect many people. So you can see how some goods could be held up and where businesses are struggling to deal with the new rules. But hopefully, as the process is in bed, things will get better. Another point to note, if any of the hospitality businesses purchase chilled meat from GB, so take for example, if you buy mince or sausages, chilled mince or sausages from Britain, which you serve in your restaurant or as part of a breakfast at your bed and breakfast. As of yesterday, these goods need export health certificates. From the 1st of July then of this year, these products simply won't be allowed to enter Northern Ireland, as goods of this type, can't enter the EU, given they're seen as goods from like a third country. So as you gear up for the reopening of the sector post-COVID, just be aware that you might have to look to home markets for these types of goods. In terms of tariffs then, on the movement of goods from Great Britain to Northern Ireland, this requires us to look at the new Trade and Cooperation Agreement first, which was reached on Christmas Eve between the UK and the EU. So on the 24th of December then, we got the news that a free trade agreement had been reached, which included for zero tariffs on EU and UK trade. I suppose welcome news at that stage in terms of the Brexit negotiations. As the details started to be analysed, especially during the first few weeks or first few days following the return to work in January, it soon became apparent that a free trade deal doesn't always mean zero tariffs, and this is what I wanted to highlight to you today. I suppose one of the lesser known implications of Brexit. Perhaps some of you are very much aware of these implications, but I thought it important, just at a very high level, to make businesses aware that the Trade and Cooperation Agreement will not help all businesses and careful planning is required. Okay, so to avail of the preferential tariffs, that is 0% tariffs on the import of goods. Goods which have UK origin and which are sold to the EU, to include Northern Ireland, can claim the preferential tariff on their customs declaration. So this means no customs duties apply. Equally, goods of EU origin can be imported to GB using the preferential status. The slide here shows when preferential tariffs cannot be availed of. So take for instance, a GB company purchases goods from a German supplier. The goods are of EU origin in this example, so they either wholly originate in the EU or were substantially processed in the EU to change their origin. So then on import from Germany to GB, they can claim preferential tariff, so no duties apply. As Feargal has outlined, GB has become a significant distribution hub globally, given its location and the fact that it's an English-speaking country. So in many instances, the companies in GB simply act as a middleman or do insufficient processing to alter the origin of the good. So what does this mean then? When the GB company sells the good back to the EU to include Northern Ireland, the importer in Northern Ireland or the EU cannot claim preference under the Trade and Cooperation Agreement in this scenario. So basically, goods of EU origin, which are in free circulation in GB, cannot be re-exported to the EU or Northern Ireland and claim preference under the new free trade agreement. Thus, on import into Northern Ireland then, or the EU, tariffs could apply. I suppose to put this into context, so say for instance you purchase bed linen. You're based here in Northern Ireland and you purchase bed linen from a supplier based in GB. The GB supplier originally purchased the goods from Italy. The GB supplier claimed preference, so didn't pay any tariff on the initial movement from Italy to GB. The GB supplier then repackaged the goods and perhaps earned a logo onto them, but this isn't deemed as sufficient processing to alter the origin of the good whilst in GB. So the origin remains EU. On the sale then to Northern Ireland, preference cannot be claimed on the free trade on the customs declaration. This is a common feature of free trade agreements. It isn't usually an issue, and I'm not sure if it was missed given the speed at which the Trade and Cooperation Agreement was reached. But given GB's location and how it was a significant hub within Europe, it is proving problematic now. So you can see where care needs to be taken when purchasing goods and how important it is to firstly understand the commodity code of the good. So that is to confirm what tariffs apply, and then if tariffs do apply, what is the origin of the good? If your GB supplier tells you the origin of the goods are GB, note, given you are the importer, it is your responsibility that you hold proof that these goods meet the rules of origin. So importers must have proof of the originating status of the product before claiming preference. And whilst there is some relaxation around this until December 2021, note the government can retrospectively ask you to produce, these statements of origin. So therefore, I would advise you to, to keep all your records now. The statement of origin can be provided on your commercial invoice, as long as it, really details the goods, describes the goods that you're importing, and, specifically notes that the goods are of GB origin. Or you could claim using your own knowledge of the goods. Just note that the records have to be retained for at least 4 years. In terms then of origin, look, it can be a complex area. Under the new free trade agreement, a product will be considered originating if it is wholly obtained. So take, for example, wholly obtained in Northern Ireland, or if it's produced in Northern Ireland exclusively from originating materials, or if it has been substantially transformed in line with the relevant product-specific rules. Now, these rules, product-specific rules, they're included in the Trade and Cooperation Agreement at Annex 2. So, as I say, it is a complex area. If you think it's an issue for you, I would advise seek professional advice rather than the risk of, having to repay the tariffs that have, that you've missed out in paying and penalties, etc. There are experts out there who do this on a daily basis. Just be careful who you choose. It wasn't something really needed in Northern Ireland before, so just be careful that you're getting the right advice and the people are qualified to give it to you. Okay, so I hear you say, but I'm in Northern Ireland. Surely tariffs can't apply on the movement of goods from Great Britain to Northern Ireland. And yes, the government have recognised this and have introduced various schemes to mitigate tariffs on such movements. So if your goods have a tariff attached, and if you can't avail of the preferential tariffs for reasons that I have outlined, the next step is to look at the UK Trader Scheme. Note this is different to the Trader Support Service, just in case you would get mixed up. So this is the UK Trader Scheme. If you're based in Northern Ireland and compliant with taxes and no previous convictions, this scheme could possibly be used by you to declare that your goods are not at risk of entering the EU. And look, it could prove very beneficial given the industry in which you operate. You can use this scheme to self-declare that your goods are for sale to or final use by end customers located in the UK. So like for any finished goods, That is, goods that don't undergo any processing in Northern Ireland. If they are to remain in Northern Ireland, you could use this scheme potentially. So take, for instance, if you were importing that bed linen for use within your business, you should be able to use this scheme to avoid the tariffs. Or perhaps maybe if you're doing a bit of processing, there are additional criteria. It is quite strict in relation to processing, but if your turnover is less than £500,000 in your last financial year, you can avail of the scheme. Or if you declare that you're bringing the goods in for processing, which will manufacture into like food for sale to customers within the UK, to include Northern Ireland, then again, this scheme could be one for you. You can apply to use the scheme through HMRC's website at gov.uk. You just type in UK Trader Scheme. Just note they will give you an authorisation until the end of February. You'll get one automatically, and then they will review it to make sure that you were eligible actually to receive it. Also, be aware that there is a waiver scheme which can be used if the trade and corporation, the preferential tariffs and the UK Trader schemes just aren't an option for you. It is linked to state aid, and it's up to 200,000 over a 3-year rolling period. And I just wanted to make you aware of this. If you're involved in like ad hoc trading with GB, or if you're a smaller business, this might also be an option for you to consider. It will be important for businesses in the tourism and hospitality sector in Northern Ireland who want to continue or who are reliant on purchasing goods from GB, that they know what is available to them in terms of not having to pay customs duty. Okay then, so on to the actual filing of the customs declaration. And just note, these are now required for moving goods from Great Britain to Northern Ireland, regardless or not if a tariff applies. So these, if you're moving goods from Great Britain into Northern Ireland, these will apply. Now there is some, in terms of you're moving goods under a certain value, £135, then no customs apply. But for all others, then the HMRC have rolled out this digital service, the Trader Support Service, to support people with, preparing these declarations for goods moving from Great Britain to Northern Ireland. It's free of charge. However, businesses will need to provide, the correct information to the Trader Support Service to allow them to complete. Trader Support Service have some fantastic step-by-step guides in terms of, how to find your way through completing these and providing the right information. However, if you don't have the capacity to deal with in-house, or you don't have, the ability to upskill on the Trader Support Service, and just note it's only going to be available for about 2 years free of charge. We don't know if they'll remove it or if they'll leave it and you'll have to pay for it. Another option could be for you to utilise the services of a reputable customs agent, and one with authorised economic operator status generally indicates competency. Another option is perhaps see if your GB supplier will deal with the import declarations, and these all go into what are known as Incoterms and the responsibility of who has to complete the declarations, whether that be the exporter or the importer. So that will be important. Other considerations which I feel are important for the tourism and hospitality sector include the temporary movement of goods. For businesses in the hospitality and tourism sector who move goods temporarily between Great Britain and Northern Ireland, there are special procedures which can be used. So take, for example, a band who regularly plays in Great Britain. They will need to take instruments back and forth, perhaps several times a year. An ATA carnet, which can be purchased from a local Chamber of Commerce, is an international customs document that permits the tax-free and duty-free temporary export and import of non-perishable goods for up to a year. So just be aware that this is available and removes the hassle when moving goods back into Northern Ireland. I have seen over the past few weeks, people move goods from Northern Ireland to Great Britain with no issues, but then on the return leg of the journey, the goods were stopped given they had to be imported. Okay, so that covered trade in goods. Now for services. So unlike trade in goods, Northern Ireland, like the rest of the UK, is now considered a third country in respect of the provision of services to the EU. The Trade and Cooperation Agreement doesn't deal with trade and services. We expect negotiations to continue for some time. However, there are implications. I know during our last webinar, there were queries in relation to Northern Ireland coach operators carrying out tours in Ireland. And just to touch on this briefly, coach tours operating between Northern Ireland and the Republic of Ireland can continue with no changes. Operators will be able to transport passengers between two locations within the Republic as part of a service between Northern Ireland and Ireland. Whilst the UK has itself joined the Interbus agreement, Interbus does not permit cabotage, which is the operation between two places within an EU country by an operator from a non-EU country. So take, for example, it will not allow a UK operator to run an international service from, say, London that picks up and drops off a passenger in EU countries. But just to be clear, these rules in relation to cabotage do not apply on the island of Ireland, so hopefully some comfort for bus and rail operators. I do know issues remain for cabotage and helicopter services across the island. But just to make you aware, DFE, the Department for Economy, and DETI are aware of the challenges faced by these businesses providing, say, chartered helicopter services and are actively looking for solutions. So, it's just a case that we have to wait and see. In terms of data, although largely a legal issue, we are aware that this represents a significant issue for many businesses. Whilst data adequacy is not included in the Trade and Cooperation Agreement, a joint declaration published alongside the deal makes it clear the EU will undertake an adequacy assessment. Until that decision is made, a temporary arrangement to allow data to continue being transferred from the EU to the UK from the 1st of January has been agreed. And look, this will last for up to 4 months. It has the potential to increase up to 6 months as long as the UK do not make any changes to their own data protection laws. So basically what this means is that businesses transferring data between the EU and the UK do not need at the minute to put in place any alternative measures, to include clauses within their contracts. If data is an issue for you, I would just urge you, to look out for any updates in respect of this decision. And finally then, my last slide, the final thing I wanted to discuss is the labour availability going forward, another key area for businesses in the tourism and hospitality sector. So under the Common Travel Area, Irish and British citizens will continue to be able to move freely and reside in either jurisdiction and enjoy associated rights and entitlements, including access to employment, to healthcare, to education, and to social benefits. In respect then of employees who are EU citizens but not Irish, it is advised that businesses promote, and note you can't insist, just promote the EU settlement scheme to ensure the workers retain their rights to continue living and working in the UK, to include Northern Ireland. And just note, this scheme is due to close on the 30th of June. So it's imperative that any EU citizens who aren't Irish and who wish to stay here apply to the scheme. We also have a number of clients who employ EU citizens who are not Irish and who live in the Republic of Ireland, but yet work in Northern Ireland. So take, for example, some of the businesses in the border areas, like the hotels, perhaps in Newry or Strabane. And for these types of workers, they will need to apply to the UK's Frontier Worker Permit Scheme in order to continue working in Northern Ireland. In terms of the availability of labour going forward, non-British, non-Irish workers who wish to begin employment in the UK whilst remaining outside of the UK, so anyone new coming from the EU to work in the UK, they, to include Northern Ireland, they will need to apply through the UK's points-based immigration system. So just to make you aware, the availability of labour could become an issue going forward. As outlined, some of these issues are largely legal. So please note that as part of Tourism NI's TED series, Ciara Lee, Solicitor and Director at Milsellic, the legal firm. She will be doing a webinar on people specifically. So if you feel this is an area you need more detail on, please do register. So that's me. Thank you very much for your time. I hope you found it of some value, and I will be happy to take any questions during the Q&A. I will now pass you to my colleague, Colleen Flanagan, who's going to take you through the VAT implications in respect of Brexit and other VAT issues of interest to the tourism and hospitality sector specifically. So Colleen, over to you.
Good morning, everyone. My name is Colleen, and this morning I'm going to talk around how Northern Ireland-based businesses can remain VAT compliant in a post-Brexit world. So I thought it might be useful to begin by discussing the VAT treatment of the cross-border supply of goods and services. And at the outset, very important to note that when I talk about the place of supply, what I'm referring to is the place where VAT is payable. So if the place of supply is Northern Ireland, UK VAT is payable. If the place of supply is the Republic of Ireland, ROI, VAT is payable. So if we begin by looking at the supply of goods. For the supply of goods between GB and NI and GB, I would have indicated in our webinar prior to Christmas that right up until the end of the transition period, there was much uncertainty as to how VAT would apply to these type of transactions. It is now clear that for the supply of goods between NI and GB and NI, these will continue to be treated as a domestic supply, as was the case prior to Brexit, with UK VAT being charged at the time of supply and eligibility to reclaim VAT applying in much the same way as it did prior to Brexit. Similarly, under the Northern Ireland Protocol, for Northern Ireland businesses supplying goods to VAT-registered consumers in EU member states, this will continue to be treated as an intercommunity supply, with the EU-based business self-accounting for the VAT arising. For the supply of goods to unregistered private consumers in EU member states, the distance selling rules will continue to apply. And what this means is that UK VAT will continue to be applied until the point at which the country-specific distance selling threshold is reached, at which point the VAT rules in the country of destination of the goods need to be applied. You'll note that there's a little asterisk there, and that's to draw the attention to the significant EU VAT e-commerce reform, which is coming down the tracks in July 2021. And really, all Northern Ireland-based businesses that supply goods via an online platform need to familiarise themselves and prepare themselves for the introduction of the VAT reform in July, which will essentially overhaul the way in which VAT is accounted for. It will abolish the distance selling threshold, and it will introduce an EU-wide VAT return that is submitted via an online portal referred to as the one-stop shop. For the supply of goods between Northern Ireland and the rest of the world, and the rest of the world and Northern Ireland, again, the pre-Brexit position will continue to apply, with this being treated as an import and export for VAT purposes. One significant change is that for VAT registered businesses, postponed VAT accounting will now be available, which means that traders can account for VAT on their VAT returns rather than at the point at which the goods move into Northern Ireland. Then if we move to look at the supply of services, again, what we see is that much remains unchanged. So if we look at the supply of services between GB and NI and GB, again, the pre-Brexit position applies, with UK VAT applying where relevant. If we look at the supply of services from Northern Ireland-based businesses to business customers in EU member states, as was the case prior to Brexit, the business customer in the EU member state can continue to self-account for the VAT arising. For supply of services to private customers in EU member states, as was the case prior to Brexit, these will continue to be subject to UK VAT where supplied by a Northern Ireland-based business. It's very important to note that there are a number of exceptions to this general rule, many of which we'll discuss over the coming slides. And finally, for the supply of services between Northern Ireland and the rest of the world, and the rest of the world and Northern Ireland, VAT and services will continue to apply as it did prior to the 1st of January 2021. So my next slide is a slide that we would have looked at in our previous webinar, but it's so fundamental to so many of the services that are provided by tourism and hospitality businesses throughout Northern Ireland that I really wanted to refocus on the rules. So this slide essentially outlines the exceptions to the general rules, which we just discussed. So for example, if I'm a Northern Ireland-based business and I provide accommodation in hotels, holiday camps or camping sites, that's deemed to be a land-related service. And my place of supply, i.e. my place where VAT is due, will always be the place where the land is located. So if that's a UK-based hotel, UK VAT will continue to apply. For providers of hiring out touring caravans or trailers or car hire, so hiring out any means of transport on a short-term basis, the place where VAT is payable is the place where the vehicle is put at the disposal of the customer. For providers of restaurant services, the place where VAT is payable is the place where the services are physically carried out. For providers of passenger transport, such as coach transport, the place where the transport takes place is the place of supply. For admissions to events, such as the hire of a corporate box at a sporting event, the place where VAT is payable is the place where the event is performed. And for providers of services relating to cultural, artistic, sporting, entertainment or similar activities, where these are provided to VAT unregistered customers, such as tours around a museum or a stately home, the place where VAT is payable is the place where the activities are performed prior to Brexit and remain entirely unchanged as a result of Brexit. And on my next slide, we'll see that whilst much of these place of supply rules remain the same, there are some rules which will change. And this will impact the place in which Northern Ireland-based businesses are required to account for VAT on certain supplies. So the first changed rule that I want to look at is for a provider of services of a professional, technical, financial, intellectual or other intangible nature, where these services are supplied to a VAT unregistered customer and that customer resides outside of the UK. In this example, the place of supply will not follow the general rules and the place of supply will be deemed to be the place where the customer belongs. So HMRC guidance provides many examples of supplies that fall within this rule. Two such examples are the provision of tourist information, except where that information relates to a particular piece of land, and the letting on hire or leasing of goods other than a means of transport, except where those goods are hired in conjunction with an operator or technician. So what this means in practical terms is that if I'm a Northern Ireland-based tourism business and I provide tourist information which doesn't relate to a specific building or a specific piece of land, and my customer is a VAT unregistered customer residing in the Republic of Ireland, there may be a requirement for me to register and account for VAT on that supply in the Republic of Ireland, which didn't exist prior to the 1st of January 2021. The second fundamental change is the change to the use and enjoyment provisions. And the use and enjoyment provisions effectively look to tax the supply in the place where that supply is used and enjoyed. And from a Northern Ireland tourism and hospitality perspective, the supply that's most heavily impacted is the letting on hire of goods, including means of transport. So prior to Brexit, the use and enjoyment provisions would have applied where the place of supply would have been the UK, but the services were effectively used and enjoyed outside of the EU. Or the place of supply would have been outside the EU, but the services were effectively used and enjoyed inside the UK. From the 1st of January 2021, the UK is recognised entirely separately from the EU. And so the use and enjoyment provisions now apply where the place of supply would be the UK, but the services are used and enjoyed outside the UK, or the place of supply would be outside the UK, but the services are effectively used and enjoyed in the UK. So again, if we put this into practical terms, what this means is that if I'm a Northern Ireland-based business and I hire out goods which fall within the scope of the use and enjoyment provisions, and those goods are essentially used in the Republic of Ireland, I again potentially have a registration requirement in the Republic of Ireland that didn't exist prior to the 1st of January 2021. So what these new rules demonstrate to us is that Northern Ireland-based businesses need to be very aware of any registration requirements in EU member states that may not have existed prior to Brexit. Over the next number of slides, I wanted to discuss the impact of Brexit on some of the VAT schemes which are fundamental to tourism and hospitality businesses throughout Northern Ireland. So I thought we'd begin by looking at the tour operator's margin scheme, or the TOM scheme. And from the 1st of January 2021, we have a new UK version of the TOM scheme. The TOM scheme applies to businesses that buy in and resell travel, accommodation and other services as a principal or undisclosed agent. And it essentially allows those businesses to account for VAT on the difference between the amount that they pay to their suppliers and the amount that they receive from their consumers, so their margin. The TOM scheme is wide-ranging and it covers a wide variety of supplies, including accommodation, passenger transport, the hire of a means of transport, trips or excursions, services of tour guides, use of special lounges at airports, catering, admission tickets and sports facilities. And you note that there's little asterisks beside the last two supplies, and that's because the margin scheme will only apply where these services are bought in and resold whilst they remain materially unaltered and are sold for the direct benefit of a traveller. Under the new UK version of the TOM scheme, the standard rate of VAT is to be applied to any margin that relates to a tour enjoyed inside of the UK, whereas the zero rate of VAT is to be applied to any tour, to the margin that relates to any tour enjoyed outside of the UK. And this potentially holds a significant benefit for UK-based tour operators who may be entitled to zero rate any European leg of a holiday or event post-Brexit. And further to our webinar prior to Christmas, we received many questions around, well, if I'm a tour operator that operates under the margin scheme, how do I determine if I'm required to register for VAT? And the answer is that you need to look at your margin scheme supplies and your in-house supplies separately. So for your margin scheme supplies, you look at the margin that you've achieved on these supplies. For your in-house supplies, including your zero-rated supplies, you need to look at the full value of your taxable supplies. When you combine these values, you combine these and compare them to the taxable threshold, and that's how you would determine if you're required to register for VAT. Secondly, I wanted to look at the VAT Retail Export Scheme, or the VAT RES scheme. So the VAT RES scheme allows non-EU visitors to the EU to recover VAT on purchases that they make on the high street, which they intend to take home with them in their luggage. And unlike GB-based businesses, from the 1st of January, Northern Ireland-based businesses, including those at ports and airports, can continue to avail of the VAT RES scheme. There are a number of conditions to be satisfied. So the first is that goods must be eligible and they must be purchased by an overseas non-EU visitor. So an eligible good will be a standard rate or a lower rated good, subject to a number of exceptions. So exceptions would typically include goods which are purchased for business purposes, or goods which will be consumed or partially consumed before the goods leave Northern Ireland and the EU. This would include, for example, perfume, which is partially consumed before it departs from the EU. The customer must make the purchase in person and complete the form at the retailer's premises in full. There are specific time limits around the export of the goods from Northern Ireland and the EU. So the goods must be exported from Northern Ireland and the EU by the final day of the third month following the month in which the goods are purchased. And there's specific documentation to be provided by the customer in order to obtain a VAT refund. So the typical timeline of a VAT RES refund is that the purchase is made and the VAT 407 form is completed. The overseas visitor has the VAT 407 form stamped and endorsed by the relevant customs authorities when they're leaving Northern Ireland or the EU. The VAT 407 form is then returned to the retailer with evidence of the destination of the visitor, and the retailer is then free to make the refund to the overseas visitor and to zero rate the supply in their records. And it's important to note that the supply is initially subject to the standard rate or the lower rate of VAT, and only when the relevant documentation has been provided can the supply be zero rated in the retailer's records. And because the UK is no longer part of the EU, technically, visitors travelling from GB to NI can now avail of the VAT res scheme. However, HMRC ultimately want any goods purchased throughout the UK to be subject to VAT at the same rate. And so where a GB-based visitor submits a VAT res claim on returning goods to GB, import VAT will be payable on the movement of those goods into GB. The import VAT will typically offset any benefit of the refund due under the VAT res scheme. And for that reason, it's expected that many Northern Ireland-based businesses will opt not to offer the VAT res scheme to GB-based visitors. And then finally, in terms of schemes, I wanted to look at the electronic VAT refund system. So prior to Brexit, we would have seen many of our clients based in Northern Ireland who incur VAT on goods or services purchased in EU member states, such as the Republic of Ireland, and they're not VAT registered in that EU member state. And in order to reclaim the VAT incurred, they would have submitted an electronic VAT reclaim or an EVR claim. So this would have consisted of an electronic submission to HMRC, and HMRC would have worked with the relevant authorities in the EU member state of refund in order to process that refund. So this typically would have applied for Northern Ireland-based businesses, for example, purchasing fuel in the Republic of Ireland. From the 1st of January, GB-based businesses will no longer be entitled to utilise the EVR system, but Northern Ireland-based businesses will, where certain conditions are satisfied. So firstly, the Northern Ireland-based business must be a taxable person registered for VAT in the UK with an establishment in Northern Ireland. Should be no issues with that. Businesses must be identified as trading under the Northern Ireland Protocol. Businesses will be identified as trading under the Northern Ireland Protocol where their goods are located in Northern Ireland at the time of sale, if their goods are received in Northern Ireland from VAT registered EU businesses for business purposes, or if you sell or move goods from Northern Ireland to an EU country. And what that very clearly tells us is that if you're a supplier of services only and not goods, you'll no longer be entitled to use the EVR system. Claims must be in relation to goods only, not goods and services. Traders must not be registered or eligible to be registered in an EU member state of refund. And during the period, the trader must not have supplied any goods to the EU member state of refund. So where these conditions are satisfied, the existing EVR system can continue to be used. Where these rules are not satisfied, Northern Ireland-based businesses will need to adopt a new process to reclaim VAT incurred in EU member states where they're not VAT registered. They will need to follow the procedures set out by the EU member state from which they're making the claim. And businesses will need to familiarise themselves with this new process and appreciate that in many instances, this will result in a delay in obtaining their VAT refund. So now I wanted to move on to look at excise. So in addition to the VAT and customs implications of moving goods cross-border, businesses which are reliant on the cross-border movement of excisable goods, such as tobacco products or alcohol, may need to consider the Brexit impact on excise duty. So if we look at excisable goods moving from GB to NI, like many other products, you will need to submit an import declaration when bringing excisable goods from Northern Ireland or from GB into Northern Ireland. And this will need to be pre-lodged prior to the movement of the goods. When the goods enter Northern Ireland, an excise duty will be payable. However, a new duty offset mechanism is being introduced. And what this means is that any excise duty already suffered in GB can be offset against any offset duty payable on the movement of the goods into Northern Ireland. The excise duty suffered in GB will typically be sufficient to offset any duty payable on the movement of the goods, and is likely to result in no excise duty being payable on the movement of the goods as they move into Northern Ireland. For the movement of excisable goods from the Republic of Ireland to Northern Ireland under the Northern Ireland Protocol, no import declaration will be required and traders will see no material change to the pre-Brexit procedures. For the movement of excisable goods from the rest of the world to Northern Ireland, again, as was the case prior to Brexit, import declarations continue to be required, as was the case prior to Brexit, and again, traders will see no real change to the pre-Brexit position. So I thought over the next 2 slides that it might be helpful to look at a case study, which will help, I suppose, demonstrate the practical implications of many of the rules that we've been discussing over our previous slides. So if we begin by looking at a Northern Ireland-based hotel, the purchase is bed linen from GB, the hotel has a gin bar and alcohol is purchased from GB, meat is purchased from the Republic of Ireland, the hotel buys in coach passenger transport to collect its guests at the start and end of their stay, the hotel's golf shop hires out golf clubs to guests, and the majority of guests travel from GB and the USA. So we begin, as we always should, by looking at the place of supply rules to determine where VAT is payable. As we mentioned earlier, the provision of hotel accommodation is a land-related supply. Where the hotel is based in the UK, UK VAT will continue to apply regardless of where visitors come from, as was the case prior to Brexit. My GB-based supplier will continue to charge me UK VAT, again, as was the case prior to Brexit. And my ROI-based supplier will continue to allow me to self-account for the VAT. So no change in the way in which VAT is charged to me from my GB or my ROI-based suppliers. As a Northern Ireland hotel importing alcohol from GB, I may need to consider use of the duty offset mechanism in relation to excise duty. For the purchase of coach passenger transport, this will be considered a package supply and the TOM scheme will continue to apply. So VAT will arise on the margin earned on any package deals that I offer. Finally, if we look at the golf shop, which hires out golf clubs, we need to look at both of our place of supply changed rules. So the first one is that where I let goods on hire to private consumers, the place of supply will be the place where my customer is established. So if I let my golf clubs out on hire to a GB-based customer, the place of supply will be the UK and UK VAT will be payable. However, we then need to consider the use and enjoyment provisions which apply to the letting on hire of goods. So if that GB-based visitor then uses those golf clubs in the Republic of Ireland, there may be a requirement for the Northern Ireland hotel to register an account for VAT on that supply. So lots for the Northern Ireland-based hotel to consider from a VAT perspective post-Brexit. If we then move on to look at a Northern Ireland-based tourist attraction, which consists of tours and admissions to a stately home, the majority of visitors are private individuals or groups from Northern Ireland or the Republic of Ireland. The tourist attraction purchases diesel from the Republic of Ireland for use in vehicles used to maintain the grounds. And the business sells gifts associated with the stately home, both to visitors to the stately home and online. So again, as we discussed earlier, for the place of supply rules, where services provided are provided in connection with cultural activities, and these are provided to private unregistered consumers, the place of supply will be the place where the services are performed. So regardless of where visitors are from, UK VAT will continue to apply. Because our Northern Ireland tourist attraction is providing services only, they will no longer be entitled to use the EVR or electronic VAT refund system, and any VAT reclaims from the Republic of Ireland, the Northern Ireland tourist attraction will need to follow the rules as set out by the Irish Revenue Commissioners in order to reclaim any VAT. Finally, for the sale of gifts, because all of my visitors are from within Northern Ireland and the EU, the VAT res scheme will not apply. For the online sale of gifts, the Northern Ireland-based business will need to consider and begin to prepare for the introduction of the VAT e-commerce reform in July 2021, at which point they will be required to register for the one-stop shop portal in order to account for VAT due in different EU member states. And I suppose to finish, I just wanted to highlight some key questions that businesses throughout Northern Ireland need to ask themselves in order to ensure continued VAT compliance post-Brexit. Firstly, has my place of supply changed as a result of Brexit? Secondly, where are my suppliers based and where are my consumers based? And how does this impact the VAT that I charge and the VAT that I'm charged? Are my consumers VAT registered businesses or non-registered private individuals? Do my services fall within the use and enjoyment provisions? Will I incur VAT in other EU member states, which I wish to reclaim? Am I making online sales to EU-based private customers? And are there new excise rules which I need to follow? And I think if businesses work through these questions and really consider the answers, they'll be in a very strong position to remain VAT compliant in a post-Brexit world. So that's all from me for now. I'm going to hand back to Feargal, but more than happy to answer any questions during the Q&A. Thank you.
Thank you very much, Colin, and indeed Evening. And just a few concluding comments. Now that much of the uncertainty around Brexit, especially in relation to goods, has been clarified, the future does belong to those who plan for it. And you know, we regularly say that failing to plan is planning to fail. But we must design the future. And design means putting things together to deliver a value-added solution to meet or indeed exceed clients and customer expectations, and thus deliver market differentiation. Now, I hope you have got a good understanding from Evening and Colin that there are certainly implications and issues for the Northern Ireland tourism and hospitality sector to be familiar with post-Brexit. And they will need to be considered in terms of the ultimate provision of your service or product to the final customer. To conclude, I suppose we'd like to draw to an attention now, draw to a conclusion. Agile planning is pivotal to business success. And as we've said, the future belongs to those who plan for it, especially in the context of responding to the implications of Brexit, living with and post-COVID-19. With the ongoing involvement of COVID-19, of the COVID-19 vaccination programme, and improved certainty around Brexit, there is a brighter dawn, thankfully, and the outlook for Northern Ireland and global economies looks more positive than it did a few months ago. In the short term, travel restrictions will affect the potential mix of customers in the Northern Ireland tourism and hospitality markets. And to be honest, I think it's acknowledged that innovative creativity, re-islanding consumers and staycations will be required when lockdown comes to an end, and hopefully we're all back fully operating again in our businesses. Yes, Brexit will create challenges and opportunities for Northern Ireland businesses in the tourism and hospitality sector. But the fittest will survive, and this has been shown by empirical research after empirical research whenever there's recessions and economic recessions around the world. So therefore we're saying, post-lockdown, please make sure you're in the fittest category once business reopens. And it will be then, hopefully, onwards and upwards. And to conclude, as I think we all now recognise, sometimes we cannot control the events around us, like Brexit and COVID-19. But we do have the ability to choose our response. And as sure as night follows day, individuals make choices every day, and individual businesses make choices every day. Individual actions matter and can be a force for change. And therefore, we would suggest that hopefully there is nothing in today's webinar to be afraid of. Indeed, the contrary. With knowledge, we can address everything covered in today's webinar. Let's try and make every moment count and look to the future with confidence, not only in ourselves, but equally in our own businesses and in the Northern Ireland tourism and hospitality sector. If today's webinar has raised an issue or a question that you'd like to discuss in private, you can get in touch, as Patricia will highlight later, via email at the Northern Ireland Tourist Board to industry.development@tourismni.com. And I've no doubt that Tourism Northern Ireland will try and organise a call for you with our Brexit Centre of Excellence team. Certainly, we're all looking forward to participating in the question and answer session. And all it means for me at this moment to say is thank you very much. And over to you, Patricia.
Thank you very much to Feargal, and of course to Aoibhinn and Colleen as well. Lots and lots of really useful information to think about today, as usual, once we have those guys on the line. So just a reminder to everyone joining us today, as always, we'll be sharing a recording of the session with you all so you can review it again at your leisure. And as promised, I'll also be sharing some of your questions with all of our experts this morning very, very shortly. So if you've got a question and you haven't popped it in the chat just yet, please just enter that in the questions section. You'll find that on your webinar control panel, and we'll try and get through a few of those this morning. We had a lot of information there in the presentation, so yeah, the time is ticking on, but we'll get through as many as we can. Just before we get stuck into the questions, I'd like to do a couple of very quick polls. Anyone who's been on our sessions so far will know the drill by now. So it should just, the first one will pop up on your screen there now, and it's how would you rate today's session in terms of content and relevance to your business? So that's on a scale of 1 to 5, with 1 being not relevant at all, and 5 being very relevant, really just exactly what you were looking for today whenever you signed up. I'll just give all of you guys a chance to fill that in. We've got plenty of participants on today, so might just take a little minute for everyone to press their buttons, and we can make sure everybody's still with us. The second poll is just, do you plan to take any action within your business as a direct result of what you've heard from Feargal and the team today? So that's just a simple yes or no. And as I mentioned earlier, we'll be issuing a short survey by email after the session, as we always do. So your feedback is just so useful to us. It means that we can make sure we keep on delivering the topics that you need. So do please take a couple of minutes to fill that in whenever you have a moment. Let us know how you find today, but also let us know what else you might be looking for and eager to see in the future. So now it's my pleasure. You'll hopefully see on your screen now to welcome back our panel of experts. We're spoilt for choice today. We've got Feargal McCormack, Aoibhinn McShane, and Colleen Flanagan all here for our Q&A session this morning. So thank you so much, guys, and thanks for some really useful presentations there. So everyone's brain cogs will all be turning and processing all of that, and lots to think about. So I think I'll kick off with you, Aoibhinn, if you don't mind. You actually did touch on this in your presentation, but just to kind of to cover this, we have a provider who actually offers helicopter tours along with transfers and private charters, and they have been finding that the Republic of Ireland has been prohibiting them from continuing flights and services in the south, and just really wondering what can be done. I know that some steps have started to happen. Can you go into that a little bit more, Aoibhinn?
Yeah, of course, Patricia. So, like, we are very much aware of the issues faced by businesses operating in this sector, you know, like providing the chartered helicopter services. Whilst there's been no agreement as yet to deal with like the cabotage issues, as there has been with like coach operators on the island of Ireland, what I can say is like we're actively working on trying to get solutions for businesses in the sector, and we have been informed that the Department for Economy in Northern Ireland have it high on their agenda, and that DETI in the south too, you know, they are very much aware of it. We're hopeful, you know, there are issues in terms of the SPS checks and all, in terms of those haven't been worked through. They're very much in the immediate at the minute, but we do hope that, you know, over the course of the next few weeks, hopefully there will be more clarity around this. Perhaps for any businesses affected by this, you know, should there not be an agreement reached, you know, consider there are other options, you know, of setting up perhaps a company in the south, you know, understanding what certificate or certifications that they need to have in place, you know, that should like agreement not be forthcoming, but hopefully that it will, that, you know, they're ready to move and be able to continue to trade.
Okay, no, that's great. And I suppose if there is anyone else who's in that similar boat and would like maybe to request a one-to-one chat with yourselves, as you say, you don't have all the answers just yet, but it's worth kind of having a chat to see maybe what options might be open or might be available. Would that be okay, Aoibhinn, if we
yes,
do that?
Of course.
Great.
Of course, you know, we're still working through them. There's a lot of Brexit started happening very quickly overnight, Patricia, in terms of the agreement on the 24th of December. So there's still a lot of issues to be ironed out, but hopefully, you know, we'll get there.
Absolutely, no, that's super. We have another question here, Feargal. I'll maybe come to you for this one. We have a tour operator who moves tourists between Scotland and Northern Ireland, but with an ROI-based motor coach. So they're kind of the whole circle there. And so it's not a straightforward one at all, I'm sure. But is there any insights you can provide on that, Feargal, or any advice?
Look, Patricia, to be honest, if it was purely on the island, I could deal with it. But what I will need to do is actually seek clarification from the person who's raised the question on a few issues. So if it's possible, perhaps after the webinar, we can make direct contact, perhaps even Aving, who has a fair bit of knowledge in this area, would do that, and we'll see how we go. But we'll definitely keep on the coach this time and not the boat or the helicopter, Patricia. We'll keep on the road this time. So no, listen,
okay.
I think refer to the questioner. It's actually quite a specific question, and believe it or not, there's one or two further pieces of clarification we'd require in order to give a specific answer. Yeah,
that is absolutely no worries at all. And we have that person's details, so we can put you in touch with them directly, and we'll go from there. And I think, I suppose, we've had a couple of VAT related questions in as well, but actually within Colleen's presentation, I think most of those have been covered. So I think it's one of those things when it comes to this topic, a lot of queries are very specific to each individual business. So I think more than ever, I suppose I'll remind everyone about our one-to-one sessions, and Colleen, I know you'll be very happy to help if anyone has a specific VAT question, but most of the questions that come through have been sort of covered, I think, in your slides.
Hopefully, yeah, but like I say, Patricia, if anyone has any specific VAT queries, more than happy to follow them up after the webinar.
That's fabulous. So yeah, we will, as you once again, be offering a number of one-to-one follow-up calls with our expert speakers. So Feargal, Aveen, and Colleen, and anyone else within their team. So if you would like to request one of those, drop me an email at industry.development@tourismni.com. So this is open to tourism and hospitality businesses based in Northern Ireland, and the guys will be happy to give you a quick call. So within that email, just include your name, the company name, just a brief summary of what your question is or what your main area of query is, so we can make sure we get the right person to come back to you, and also try and include a contact phone number for me there as well, and the guys can give you a quick call back. So that will be a confidential one-to-one chat with one of the team, and I will be sharing your contact details with the team, but that will only be in order for them to give you a call. It won't be retained for any other purpose at all. I'm just going to turn my camera off because I think I've frozen there, so but I am still here. Okay, so we do have limited capacity for these, but so far the team have been doing a great job of getting in touch with everybody, so we'll try and get in touch with as many of you as we possibly can. Also, just a reminder, if you head to covid19.tourismni.com and click on the support centre, you'll find recordings and support materials from all of the sessions that we've done so far, and I'll be aiming to get the recording up from today as soon as we possibly can. We know this is a bit of a hot topic, so all being well, we'll have that video up by tomorrow if we can. Also, just remember to check the upcoming webinar section while you're there. We have a couple more of our People Series sessions still to come that'll be taking place this week and next, looking at COVID-19 and Brexit once again, both in the context of your staff. Also, we're hoping to be releasing some new topics in the coming weeks, so just keep checking back regularly and make sure you don't miss out on anything at all. So thank you very, very much, guys. I think we're due to finish right on time here at 11:30. So I'll not keep you any longer, but thanks so much, and I look forward to welcoming you and all of today's attendees back to some more sessions very, very soon. Thanks so much. Cheerio.
Thank you very much, Patricia.
Thanks. Bye, guys.
Thank you.
Bye.